Hi, this is Daniela Cambone for StansberryInvestor.com, and we have an incredible episode for you today. I have a Wall Street legend with a career spanning over 50 years. Marc Chaikin is the creator of one of Wall Street's most popular indicators, a system that appears on every Bloomberg terminal in the world and is used by banks, hedge funds, and every major brokerage site. He's spent, like I said, 50 years on Wall Street, survived and thrived in 9 bear markets, built 3 new indices for the NASDAQ. Today, Marc is the chairman of Philadelphia-based research firm Chaikin Analytics. Chaikin offers a powerful suite of research, market news, and commentary portfolio management tools for institutional and retail investors. Among these, his Power Gauge is a must-see system with a long and impressive track record. And we're going to go over some of that track record with my guest today. Please welcome to StansberryInvestor.com, Marc Chaikin. Marc, it's a real honor to have you on the show. Welcome. Daniela, it's just great to be here. Can I call you Danny? Absolutely. Call me Danny. My friends call me Danny, so please. So Marc, before we get into this interview, because I have so many questions for you, the big news here is on May 25th, you will be doing an incredible event, a webinar, where you will be making the biggest, boldest prediction in your 50-year career. Tell us a little bit about it.
We've just been through a pandemic sort of lockdown where everybody's habits have changed. The way we interact with friends and family, the way we shop, the way we consume entertainment, all got a big jump start during the pandemic lockdown. But now as the economy is reopening, it's important to realize that some habits won't change and some habits will change. So we're using the Power Gauge rating to find stocks that are going to benefit from the reopening of the economy, recognizing that some things really have changed. And we have to find the stocks that are going to be successful, leveraging what we've learned about people's habits and the way we live during the pandemic.
And, the Power Gauge fascinates me. And of course, I know this is proprietary information, but if you could tell me a little bit about how you came to develop it and what's used to power it.
Well, I've worked with institutional investors for over 30 years. I had an institutional brokerage firm in the late 80s and early 90s. It's a company that we sold to Reuters. And what we did was to share our technical analysis indicators in a real-time platform with hedge fund managers and major pension funds, people like George Soros, Paul Tudor Jones, Michael Steinhardt. And in order to be successful, we had to learn what they were doing because we showed them how to use technical analysis in their decision-making. So in essence, they opened the kimono. They shared their methodologies. Some of them were value investors, like Warren Buffett, Bill Miller down in Baltimore. Some of them were hedge funds, fast money traders, or investors who were looking at earnings momentum. And so fast forward to 2008, I had gone into retirement, back to my weekend house in Connecticut, thought I would play some tennis for a while. And
Right.
That evolved into a 10-year hiatus. And then 2008 came along. And my wife's 401k plan dropped by over 50%. And she was getting more agitated every day, calling her advisor. She was actually paying 1% for the privilege of losing half her retirement funds. And finally, she threw in the towel and she said, I'm just going to get rid of this advisor. What should I do? She said, there has to be a better way. And I said, there is, and I'm going to come out of retirement. We're going to start a company. And I'm going to fulfill my life's ambition, which is to create a system that goes way beyond technical analysis, that looks at both technicals and fundamentals. And that's going to enable investors like you to manage their own financial future, to basically take control. And that's exactly what happened. We started Chaikin Analytics in a 1.5-year research project. I drew on everything that I had learned from these very successful institutional money managers. And the key is that they all had different styles and time horizons. So the Chaikin Power Gauge rating looks at 20 factors in 4 categories: value, growth, technical, and sentiment. It's 85% fundamental. So it really keys in on the way smart money looks at the market, recognizing that there are a lot of different styles that smart money investors look at. So the bottom line is we've always been transparent about what the factors are, but our secret sauce is how we weight them within the model.
Interesting. And I love the story of you telling your wife that, because I'm thinking in my head, she either thought my husband has lost his mind or he's the next Leonardo da Vinci.
Well, I think now she thinks we've lost our mind because we're 10 years into this journey, but she's
Wow.
become one of the best stock pickers I have ever met.
Wow. Using,
I'm sorry,
wow.
she's the poster child for the power gauge rating.
Okay, so I just want to go over some, the power gauge rating last year alone, it pointed to Ride Blockchain before it shot up 10,000% in 11 months, Digital Turbine before it shot up, over 780% in 8 months, and Overstock.com before it shot up over 1,000% in 4 months. And there's so much more. So it's working.
Oh, it is very definitely working. And my wife, Sandy, actually bought and still owns Digital Turbine. Digital Turbine serves up ads on smartphones. It's a company I had never heard of. And now suddenly it's become a hot stock, so to speak. I think the interesting story in that is Overstock.com. We had just moved from Philadelphia back up to Connecticut, and we were sort of redoing our house. We were looking for porch furniture, and we bought it from Overstock.com. So when Overstock got a bullish rating, I thought, well, gee, there may be a trend happening here. Maybe a lot of other people are doing what we're doing because we can't go out to stores to buy things.
Let me ask you this, Mark. How does the power gauge factor in events such as the pandemic or other black swans?
Well, that's a really interesting question, Danny. 3 of the factors in the power gauge monitor what we call expert opinions. We look at analyst estimate revisions. So we don't know all of these factors. The model doesn't know what the future is for a potential vaccine, but Wall Street analysts do, and insiders do. So insider buying and selling is one of the 20 factors in the model. And we also look at how analysts are changing their opinions about a stock and what the short sellers are doing. So the secret sauce in the model are what I call the experts, the smartest people on Wall Street. And by monitoring what they're doing and saying, we don't have to know where interest rates are headed or what the dollar is going to do. We don't have to know if there's a vaccine. We're leveraging the smartest people on Wall Street and what they're thinking.
Oh, interesting. Well, I guess that answers my next question. I was going to say, how does it factor when people say this is not, a real market, that it's just a Fed-fueled party, that there's such a disconnect between the real economy and the stock market?
Well, what I've learned in 50 years on Wall Street is to respect what the market is doing. So one of the smartest people on Wall Street, a really good friend of mine, Marty Zweig, had 2 sort of points of wisdom. Watch the Fed and listen to the market. So I've always been of mind that the market will tell you what to do. And you shouldn't put your feet in cement and tell the market what to do because the market is always right.
Interesting. The market is always right. Just on that note, Mark, I would love to get your thoughts on the general sentiment that you're seeing now in the market. How much more steam do you think the S&P, the NASDAQ have?
I think there's still more upside. I'm viewing what's going on as a slow melt up. And there's still the potential for a big explosive blow off in the market. But right now, it's that Fed liquidity fueling stock moves. I mean, it's fueling a lot of asset moves from Bitcoin to NFTs to stocks. But basically, as long as the Fed keeps priming the pump, as long as the Fed is committed to keeping short-term interest rates near or at 0, there's just a lot of cash floating around in the system looking for a home.
Mark, I have to ask you, during your 50-year career, have you ever quite seen a market like the one we're living through right now?
I have, Danny. There was a bear market in the early 1970s, 1973-4 to be specific, when stocks very much like today were viewed as buy and hold forever. Stocks like Polaroid, Avon, Xerox, Eastman Kodak, IBM. They were household names back then. And these stocks got taken to the cleaners in the bear market of 1973-4, some of them down over 90%. Many of them didn't survive, but even stocks like McDonald's, which survived, took 9 years to get back to their previous peaks. I think we're seeing some of that today in stocks like Zoom, Peloton, Ring Central, Chewy, the stocks that people bought during the pandemic because that's what they were using. And I think a lot of people are still holding on to these stocks thinking that they're forever growth stocks. And that couldn't be further from the truth in the opinion of the Power Gauge rating.
Interesting. Now, I know on this upcoming Tuesday, you will be giving away the biggest prediction you say in your 50-year career. I mean, I can't wait to know what it is. So I know you're not going to tell us now, but can you tell us sectors that you think are hot or we should be looking at right now?
Well, I think that anything that speaks to digitization, that's one of the sort of takeaways from the pandemic and the way we adapted our lifestyle. Everybody is digitizing, from people who sell via the internet to the way that we access information, the way we consume entertainment. So anything that's involved with digitization is an area and a group of stocks that we're interested in. Also interested in infrastructure stocks. It's clear that one way or another there's going to be a compromise in Washington, and infrastructure is going to be top of mind. We just had a big blackout in Texas. There was a pipeline that got shut down by cyber criminals. We're going to be addressing that in the next 4 years, and the stocks that are involved in that are top of mind for me.
And I'm sure you get this question all the time, Marc. What about Bitcoin? What are Marc's thoughts on the cryptocurrencies?
Well, I don't pretend to know much about Bitcoin. I'm skeptical of the big hype that's going on. And I think that Bitcoin periodically corrects 40 to 50% from the high. I think a lot of people who've gotten into it recently don't realize that. So Bitcoin's going to be volatile. It's going to have big corrections. And I think at some point in every market cycle, you see a peak, but I'm not sure we've seen the peak yet in Bitcoin.
How about safe havens? Do you think gold is a good play?
Gold is actually very attractive right now. Some of the gold stocks are breaking out of downtrends. For a long time in this bull market, Bitcoin was viewed as an alternative to gold as a safe haven. I think with the volatility of Bitcoin that we've been witnessing in the last month or so, that gold is starting to look more attractive to people who are looking for a safe haven. You had a couple of pretty aggressive money managers on CNBC in the last 2 weeks saying that for the first time in decades, they're buying gold.
Yep, absolutely. Well, Marc, I guess my final thoughts here as we wrap is, advice for investors and the viewers watching. How do you navigate the market during these times?
Well, three things. Number one, you have to realize that fundamentals drive the market, but that emotions drive the market to extremes. So for me, in 50 years on Wall Street, the path to profits has always been to combine fundamentals with technicals. The challenge is you need tools that you have confidence in so that you can stay the course and not get influenced by the headlines that the major news media like to throw at us. So I think it's basically some very practical Wall Street speak. Have a plan, have the tools to enable you to execute the plan. And for us, the plan revolves around the Power Gauge rating, and stick to it day in and day out, month in and month out. That's right. What the smart money does.
Yeah, just one point on that. When you said, whatever's in the headlines is usually, it's already too late. Just to take that further, what happens when banks come out with buy signals and whatnot? That I believe in past interviews I've heard you say that's also too late.
Well, the major investment banks have always been late to the party. They monitor what's going on, but they're slow to change their opinions. So the Power Gauge rating has often anticipated what the big banks are going to be doing. We monitor flows from smart money coming in and out of the market. So we've often found that the Power Gauge rating anticipates what the banks are going to be doing.
Marc, fascinating thoughts. And you will be giving your biggest prediction in 50 years on May 25th. You got to watch this one, folks. You got to go to marcprediction.com to register. That is MARC prediction. He will be giving away his biggest prediction, like I said, in 50 years, his free recommendation of the #1 little stock to buy now, his free recommendation of the #1 popular stock to avoid right now, plus details on a new type of company Marc predicts is a must own today. How can you miss this, right, Marc?
Danny, I couldn't have said it better myself.
Well, I will be watching. Thank you so much for your time. It was an honor for me, Marc, to have you on. Thank you.
And a pleasure for me, Danny.
And thank you all for watching this episode of StansberryInvestor.com. We will have much more for you, so be sure to stay tuned. In the meantime, remember to share us where you watch us. That's it for me. I'm Daniela Cambone.